All right, I'll try again. And good morning, good afternoon, good evening, traders. This is FX Chief. Can you hear me? Can you hear me? Great. Ralph, good afternoon or good morning. Ramon, Mary, Denise, Maurice, David, Ramon, Jim, Orthniel, let's see, Glenn, Angelo, Claudia, Scott, Devin, Jay. Everybody, I just want you to know it's such an honor and a privilege to be in your homes this morning, afternoon, or this evening. Jesus and I are grateful for your attendance here and want you to know that we're glad to be a part of your forex journey. I want you to know that once this pandemic is over and you're ever in the Orlando area, I certainly want you to stop by and come and see me, and I'll introduce you to some of the finest people in the trading industry or the forex industry. I always like to start off with something funny. So this young boy, he asked his dad if he can borrow the car, and his father said, sure you can, just as soon as you get your grades up, start reading your Bible on a daily basis, and you cut your hair. And so after about 2 weeks, he goes to his dad and he says, Dad, man, you've seen me reading the Bible every day, and look at my grades. I've gotten them up. Look at these last tests, straight A's. Can I now borrow the car? And he said, well, you didn't cut your hair. And he says, well, Dad, the reason I didn't cut my hair is because in the Bible, man, I discovered that Moses had long hair, Solomon had long hair, Goliath had long hair, and even Jesus had long hair. And the father said, yeah, you are 100% correct about that. And they walked everywhere. And so I guess when things change, you got to change with it, right? All right, everybody. Is there anybody new here? Is there anybody new here? This is your first time to interact with me on the Chiefs trading checklist. Anybody new here, or are all of you? This is your second or third or fourth time. All right. Orthanel says this is my first time. All right. Everybody that's here for the first time, I want you to go to your dashboard. You see your dashboard? I want you to click on your dashboard, as you can see. I want you to go find, you should be able to go find the FX Chiefs checklist. Now, a lot of times, let me just do this. Let me go back up here. Here we go. Ultimate Traders Checklist, right here. Ultimate Traders Checklist. Click on Continue. And right here is your manual. It will start to appear here. You may want to click right here. And that will download the manual. Now, for the rest of you, did you all, from last week to this week, did you read the checklist? Yes or no? Okay. Well, there are some that did, some that didn't. You know, you have to take on the responsibility of your own life and your own journey. You know, I'm trying my best. And the purpose of reading all the details about the book is so that, like Ramon said, yes, I read it, but some things sound confusing. Okay, let's start with that, Ramon. What is it that sounds confusing? Is there anything right off that you can type in that sounds confusing? All right. Well, let's get started. All right. The first thing that I would like you to do is I would like you to take a screenshot of this. Okay. I'd like you to take a screenshot of this. Because I want to start off by saying to you that the market is all about an A, B, C, D price swing. That's what it's all about. Okay. And as the market rallies or and makes higher highs and higher lows, or as it dips and makes lower lows and lower highs, it literally moves within a price swing. And you've got to get this in your head, because this is what determines literally your success. Now, very seldom when the market changes direction do people catch the first A, B, C, D. Okay, you just don't seem to catch it. But let's just say you did. I just want you to know, I want to explain to you the A, B, C, D price swing structure, both in an uptrend and a downtrend. And it goes like this. Once a D is hit, okay, do you see the red A, B, C, D? Once the D is hit, I want you to envision every A, B, C, D as a game. It's a game, okay? And when the market hits the D, whether it's in an uptrend or a downtrend, when it hits the D, the game is over, okay? It's a lot like playing tennis, okay? You play tennis, it's usually the best of 5 sets, or matches, if you will. The best of 5 matches, which creates a set, wins the game, okay? And so what really helped me to understand that, okay, thank God that game was over, man, I got beat up, okay? To get rid of that feeling and to be able to start all over again, you've got to understand this concept, okay? That when you trade either an up A, B, C, D, or a down A, B, C, D, okay? When you trade, and we'll all talk about the up A, B, C, D, you really never can trade the A to B. So if we were to take the swing and we were to divide it up into 3 parts, you'd have the A to B, one part, B to C, another part, and C to D, another part. Can you all understand that? So what I've just done is I've eliminated 1/3 of all your challenges. And I have said, okay, here then becomes the next challenge. The second third is the retracement. Okay, it's the retracement. Now, in an uptrend, the Fibonacci's and the ABCD is divided up into a yellow zone, a green zone, and the up push zone, which I'm having done now as light blue. Okay, so when the market hits a D, you want to figure out how to make some money on the retracement. And I'm just going to let you know, these are the time frames that I watch. I mean, I watch very closely the daily, the 8-hour, the 4-hour, and the 3-hour. I like to watch those, okay? Of course, I always know where my weekly's at. But this A, B, C, D exists on all time frames. It's gonna exist on a 5-minute chart. If you love to scalp, man, this is the way to do it, okay? But every A, B, C, D, I don't care if it's on a 5-minute, 10-minute, 15-minute, 30-minute, 1-hour chart, 2-hour, 3-hour, 4-hour, 8-hour, daily, weekly, monthly, yearly. Everything moves in an A, B, C, D Fibonacci sequence. Okay. And Dan, I'll go to that answer. Make sure I'm going to turn my page. Dan says, Chief, I don't understand the concept on page 151. So let me get to 151 and see what it is. Oh, you're talking about the second way. Okay, no worries. That's an easy task. Okay, we'll get to that. We're going to get to that, Dan, in this class. Now, I just want everybody to understand that we want to make a little money on a retracement. When the market hits a D in an uptrend, we want to sell the retracement. Okay, we want to sell the up retracement. And so we want to make a little money back to the 382. Now, sometimes the currencies sit inside the B to C boundary literally for 2-3 weeks, a month, 2 months. Okay, there's a couple currencies that are in the yellow AB boundary. And so I want you to think about this, okay? I will usually trade a D extension back to the 382. Okay. Now, if the market goes a little deeper, that's fine with me. But if it bounces at the 382, bounces at the 50, and goes right back up to the B and forms another bearish candlestick formation or a bearish 1, 2, 3, I will trade it back down to the 50. On the second go around, I'll trade it back to the 50. Why? Because eventually it's going to dip into the find the C area. Find the C area. Now, where then is the C? Well, if we look right here, the C is usually one of the lowest levels inside the AB boundary, inside the green, okay? One of the lowest levels of past resistance to become future support, okay? One of the lowest levels. I'm going to find the slide for you to see. This is in your book, okay? Right here, okay? Now, look. This market is clearly in an uptrend. Can you all see it? Can you see how this market? Now, everybody read this. I want you to read it. Just read it real quick. Yeah, Ramon, I'm going to do all that. I'm going to do all that. No worries. Now, did you read this, everybody? So, now look. If we hit this D like here, okay, and we see that we've got a yellow zone, and David said, Chief, change there the C to where are you talking about? Find the current up AB boundary and draw all levels of past resistance to become future support. The market 80% of the time retraces back to the second two lowest levels of past resistance to become future support. And that is where? Okay, thank you so much. This is on page. Thanks for the correction. Some page of change. Page 147. Okay. All right. Now, everybody. When you see a new up AB boundary, I want you to draw, if you're a newbie, if you can't see it, I want you to maybe take a deep purple and draw a line, a horizontal line at the A and a horizontal line at the B. Okay. Now, this is the AB boundary. If you were to draw a vertical line straight down right there and look left, you can see that that's a high, 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 and that's a high. Do you see it? And usually what takes place is when you've identified past resistance to become future support, when you've identified that, then the market, listen to me, as long as you're trading in the direction of the larger time frame, which means the larger time frame is in an up push zone and the market has been making higher highs and higher lows, then in a new AB structure, the lowest two levels inside the green will usually be where the C is. Okay? Okay, do you all understand that? Say, Chief, man, you are a miracle maker, because the truth of the matter is, everybody, a good solid 90% of the time in an uptrend, the market will retrace after a D and it will go find its C inside the green zone, okay? And it will usually be at one of the two lowest levels of past resistance to become future support, and that will be where you find your C, okay? Now, I want everybody to know, when I see an up A, B boundary, and I know I'm trading in the direction of the larger time frame, I am going to come in and place a buy at the 618 and a buy at the 786. Okay. And both stops will be below the A. I don't have one problem in limiting in and placing my stop below the A. Okay. Now you might say, well, Chief, I don't want to get burned. Just stay with me here. Okay. Now, if we're in a downtrend, okay, then we're going to do the opposite. Okay. We're going to look for the market to be falling, and we're going to have a retracement zone here. We're going to have a find the C zone, and then we're going to have a down push zone. Everybody got that? Down push zone. Now, look at this AB boundary. Isn't this a level of past support to become future resistance? And isn't this the highest level of past support to become future resistance? This right here. And so in a downtrend, we want to go into the pink zone, and we want to find the level of past resistance to become future support in the structure, because this is what we're looking for. Okay. Now, if you think about it, I really don't need to know where past support to become future resistance is in the yellow zone, because, you know, only 10% of the time does it bounce there. Everybody got that? And so look at the down A, B. Now, everybody, I want you to think. It's at this moment when the market hits the B, it's at that moment that, or the D, A, B, C, D, when the market hits that D, I turn to a 1 hour chart to find a 1, 2, 3, a bullish 1, 2, 3 on the 1 hour chart, because if I can find it, I will usually get in at a better price than waiting on a 4 hour chart. Does that make sense? Golden nugget, everybody. Golden nugget. Okay. Now, it's at this moment when the market hits the D. Let's just say the market's right here and it hits the D, and I find a 1, 2, 3 on a 1 hour chart, and now I'm in the yellow zone. So since I'm in the yellow zone, I got to be thinking of buying, because I'm in a down AB, and I buy the retracements. Okay. But see, at this moment in time, when it hits the D, can't I go right now? Can't I go right now? Let's just say I entered on a 1 hour chart. Okay. Can't I go right now and find in a downtrend my past support to become future resistance in the pink zone? Can I go find my levels right now? Yes or no? Can I find it right now? I can I? Now, I want you to think about something. We don't make any money. We don't make any money from our past. Okay, I can't make any money through all this. I have to make my money in my future. Can you envision this just rallying back up to one of these two levels? And can you imagine it U-turning right there and then falling all the way down to the D? Can you envision that in the future? Yes or no? Okay. So if this is the buy zone in a down, this is the buy retracement zone, then could I put a limit order right here at the 618, 5 pips in front of it? Couldn't I put a limit order there to get in so that I don't have to sit there and wait? Or if you wanted to wait until the market hits that, and you want to wait until it does a 1, 2, 3, then at least put an alarm there so you don't miss it. Does that make sense? Put an alarm at that price. Okay. Now check this out. So right now I'm already prepared. Look at, I can't trade the A to B. Would you agree? We already agreed on that. I can only trade back to where the retracement zone is, to the 382, possibly a little deeper. But I want to get out just in case it bounces there and, you know, kind of goes crazy. But then don't I want to trade at the 618, place my stop above there and put my limit there? And can't I literally just set it and forget it? Yes or no? Okay, now watch. I want to show you something. Sun Tzu, the great Chinese warrior, he said, it is the warrior who knows when to fight and when not to fight who will ultimately prevail. Okay? It's the warrior who knows when to fight and when not to fight. Now, everybody, if I buy a 618 and I put a stop there, just like that, okay? Whoops, reset. And I put a stop right there. Okay, and I then come in and I put a limit to get out. At the 1.618. Am I in on a 3-to-1 risk reward trade? I mean, if I multiply this by Control C, Control V, there would be 1. Okay, that's at the bottom. 1, 2, and 3. Yes or no? Is that a 3-to-1 risk reward ratio? Now, watch what happens if you wait until a bullish candlestick appears. Look at, see here how the market came down, and then here is a morning star. Look at this morning star. See this morning star? This morning star, from this tip to the formation of that morning star, that literally is 44 pips. So let's go back to our drawing. Let's go back to our drawing, and let's look at this and say, okay, here's an A, B, C, D. If I am going to wait for like a 40 pip or 30 pip, look at a 40 pip. I'm waiting for a 40 pip morning star to appear. That means my risk, okay, has now gone from here to there. Do you see that? And if I did a risk reward ratio back up to the 618, then this is a 1.5 risk reward ratio, isn't it? See how by waiting you can take it from a 3-to-1 to a 1 to 1.5. Do you see that? Everybody see that? And so what you want to do is you want to find trades that will have a 3-to-1 risk reward ratio, because on a 3-to-1 risk reward ratio, you can be wrong 7 times out of 10 and still make money. Okay? So watch what happens. A new AB boundary appears. Successful traders win their trades first before they enter the market, while novice, new, defeated traders, they jump in the market and then fight to win. Okay? So take this right here. I've already won this trade. Number one, I'm going to put a limit order 5 pips in front of the 618 and 5 pips in front of the 786. And so when this retraces, I'm buying it now. I'm getting out at the 382. I'll make some money. Okay, watch this. I'll make some money as it retraces back to the 382. Okay, there it went to the 50. Now it actually took me in right here. See, because that's I'm in at a 618. Now in this case, I'll be in front of the 786, and you can see the market goes up, hits that, takes me in again at the 786. But see, look at, if I was getting in at the 786, look at how much profit I've given away from the 786 back to the formation of the bearish candlestick formation. Now, if I get in at this bearish candlestick formation, I have to have a bigger stop, don't I? Do you all see that? Do you all see that over here in this right corner? So look at the market starts to fall, then it comes down, and well, what does this tell us? How many times have I told you if the market at any time comes back down to the B low or a B high and forms an opposing candlestick formation, then you should buy it in a downtrend and sell it in an uptrend because it's going deeper back inside the AB boundary, right? Now, if I wanted to, and this is what I will do, I will profit take, okay? I'll profit take, and I will put in another order 5 pips in front of the 618, and let's see what happens. Okay, so look at here. I bought down here, went back to the pink, took in 5 pips in front of the 618, so I'm in now. Okay, and now I'm in the down push zone going to the 127. Do you see that? All right, so if you can't explain it, and if you can't understand it, then you can't trade it. So this is what I want you to do, and let's just do one at a time. We'll start off with the down AB boundary. In a down A, B, C, D, this is what I want you to say to yourself. I can only trade the B to C and the C to D. That's all I can trade. I can't trade the A to B. So what I want to do in a downtrend is I want to buy in the yellow zone when the market hits the D, but I want to go down to a 1 hour chart and find me a 1 hour, 1, 2, 3, or a 1 hour crown, okay? And after I buy, okay, I immediately go and find the levels of past support to become future resistance in the red zone. And I try to find the 2 highest, okay? Not try, I go find the 2 highest. I then, when I see that they are near a 618 and 786, that's where I am going to project my C to B in the yellow zone. So either you make a decision to limit in, or you make a decision to sell a bearish candlestick formation. Now, if you limit in, you got to place a limit 5 pips in front of the 618, and you have to put 5 pips in front of the 786. Okay, if you limit in. And then once you get in, okay, and the market takes you in, then you can choose to stay in all the way down to the D, okay? Or if it comes down and forms a bullish candlestick formation, you can profit take and reload or trade a secondary counter trend line break or bearish candlestick formation down to the D. So, and that's how I'm going to make money selling a down A, B, C, D, because in a down A, B, C, D, okay, and let me see if I can do this. In a down A, B, C, D, okay, let's see, here's the down A, B, C, D. Here we go, look at this. And let me see if I can control C. Let's see, control, I want to go smaller. Let's do this. I'm going to take this over here and allow you, and I can probably make this a little bigger. And take this one, and let's just do the downtrend, okay, right here, okay, that you are going to compare this to this, and do not type in done when you're done explaining this to yourself. I want you to type in done when you comprehend it and understand it, that you are going to be in a downtrend as long as you're trading in the direction of the larger time frame. In a downtrend, you're buying in the yellow, you're selling in the pink, and you stay bearish until it hits the appropriate D. Okay? Now I'm going to give you all probably however long it takes, I guess, until you can explain this. Oh, so wait a second. What happened here? We don't want to do that. We're not there yet. So how did this photo change? I thought you could go back. I don't see the back button. Okay, so see the back button? Let me go. There's the back button. It's on my keyboard. Duh. Okay, explain it to yourself. Devin, I don't have crosshairs. Maybe I do. Copy, set, visual, actual size. Slideshow, print, share, edit, create. I don't have crosshairs on a snip like this. This is an actual photo. And I don't have crosshairs. I don't think I do. I don't have crosshairs on this. I only have crosshairs on the charting right here when I have charting. So when I use my charting, I'll bring in the crosshairs right here. I'll do this, okay? All right. So I'll take this back. And now everybody explain this to yourself. Explain how you're going to make money in a downtrend. I don't want you to focus in on the larger time frame right now. Don't focus in on the larger time frame. Just understand and explain to yourself the structure that exists in a down A, B, C, D. That's it, okay? And we're going to talk about bullish and bearish candlestick formations, Stephanie. Okay, now I'm going to start to answer some questions because let's see. Whoops, here we go. Steven says, is there are specific levels to limit in after the morning star? Is that done at past support? Okay, this would be, let's go at past support to become future resistance. I want you to think about this, everybody, with that question. I know some trades take off from the yellow zone. I can show you a way to enter those trades, but the majority of trades that you want to find out of the 28 currency pairs need to be, and guys, we're only thinking about the downtrend and we're only thinking about this structure. We're not dealing with larger time frames. So you have two choices. You can wait for a bearish candlestick formation to appear in the yellow zone. The reason I watch 4-hour time frames is because it usually takes 3 candles. See, here's an evening star, beautiful evening star. But if this is a 4-hour chart, that's 4, 8, 12 hours, is it not? 4, 8, 12 hours. Agreed? Okay, now, which means I can go to bed and sleep, and I'm going to need 12 hours before that candlestick appears. But I'm sure many of you have gone to sleep, you're watching a time frame, you see the market hit that level and then take off, right? And you miss the trade. So I do know this, that a large majority of the time, if you want to trade your candlestick formations, then you have to master your candlestick formations. Now, how many of you trade with your candlestick formation cheat sheet in front of you? How many of you? Or I should say, how many of you do not? Just type in not. But see, if you understand the concept that as long as we're trading in the direction of a larger time frame, the ABC structures, let's look at this one. AB came back to a 618, took me in and fell. Now, this one, AB, did not come back to a 618, went to a 50 and fell, okay? And so now here's an AB. And you've got to remember every A, this is golden nugget, every A, B, C, D in a direction, the C to D gets larger every time, okay? Now, Orthanel, Devin, Mark, you have got to print out where's my candlesticks? Okay, it's under the 11 components. So let me go back here. Go to your manual. Be a good little boy and a good little girl and be responsible and go to this sheet and don't ever trade without this sheet right here. Let's control negative without this sheet, because there are 5 candlestick formations that represent a U-turn. That's what they all do. They represent a U-turn. And so you have in a bullish, you have a bullish shooting star, which is a full-bodied bearish followed by a bullish dragonfly doji, a hammer, as you see here, a morning star, which is decision, followed by an indecision candle with a decision candle, which represents a U-turn. And then the most popular that appears probably 60% of the time is the engulfing bullish candle. It's where the market's retracing, the bulls step in and they literally bounce at a 618 and engulf the previous candles. The other one is in an uptrend is a bullish piercing line. Okay, this one, a lot of traders mistake this for an engulfing bullish candle. This is not an engulfing bullish candle. It's a bullish candle that literally comes back over 60% of the bearish candle. You see how we literally came back 100, the market came back 100% and engulf these. And then of course, the two that show up the least is a tweezer bottom, okay? Now, when you go to print this, okay, I need to show you this. This is page 55. When you go to print it, I want you to know the computer, look at the top up here, everybody, says 1 of 183. The computer looks at this as page 1, page 2, page 3, page 4, page 5, and this we consider page 1. So when you are on page 55, okay, and you want to print out page 55 and 56, okay, when you want to print out page 55 and 56, you will go like this. You'll go right click and you will go print. And then over here, you will click under pages. You will go 55 plus 5, or actually 6. So you would go page 50 right here. Page 55 plus 6 is 61. Now, oops, pages, custom. I'm going to go 61. 61. Okay, now it should show you the page you're trading. So we would need to go 60, which is the bullish, through 61. So that shows you the 2 pages you're gonna print. You see that? So I just didn't want you to get frustrated. So let's look at, we saw the morning stars. Let's look at the evening stars, and it's the absolute opposite. So you have a bearish shooting star, which is a bullish candle followed by a dragonfly bearish or a hanging man. You have an evening star, which takes 3 candles. You have a bearish engulfing, which also takes 3 candles. You have a dark cloud cover, which is the opposite of a piercing line, and then tweezer tops. Now, everybody, in a downtrend, if you want to trade candlestick formations, trade these at the 618 or the 786 in the pink zone. If you want to trade bullish candlestick formations, you trade any one of these in the green zone. Everybody got that? Everybody got that? So let's see, we were dealing with the downtrend, so I'm going to cancel this. And I'm going to go back to the downtrend right here. And just like here, you want to trade past support to become future resistance, just like right here. We want to find past support to become future resistance. And we want to buy the yellow, sell the 786, sell the 618, and take it down to the appropriate D extension. Everybody got that? Say, Chief, I got the downtrend. Say, I understand the downtrend. All right. Let's take our 10-minute break, and we'll come back after break and keep on going. Okay? All right. So now, guess what we're going to do? We're going to, or you are going to now explain the whole process in an uptrend. Okay. So I'm going to have you do it. I want you to explain it to yourself out loud. Now, listen, everybody, but this time I want you to say to yourself, okay, at an A, there should be a bullish candlestick formation. At a B, there should be a bearish candlestick formation. If the market goes up to the B again, there should be a bearish candlestick formation. Now I'm taking my arrow. Do you see my arrow over here to the left? I don't think this will last. Let me do a smaller. Okay. I want you to see this. Do you see this engulfing bullish candle at the A, which is really A, B. Do you see that evening star? A, B. C, right here, 618 engulfing bullish candle. D, evening star. Market comes down to the 5-0, gives an engulfing bullish, which is a sign that it's going to go back up. At the B high, gives an engulfing bearish, which is a sign it's going to go back down. But look at how inside the C was a piercing line. And that's what we're looking for, see? Now, I would have been taken in right here at the 618, possibly the 786. I don't know that it hit the 786. I don't think it did. But you see how this is the retracement zone. This is the find the C zone, and we take the ride to D. Now, explain that to yourselves. Type in done. When you comprehend it, Ralph, I'm going to get to trading systems. Let's good questions. Just whenever you're done understanding this, I know this is a new way of thinking, but let's just. I really shouldn't say I know this is a new way of thinking. This is taught in the UTP. Type in if you need more time. Okay. Oh, sorry. Some people typed in, I need just a little bit more time. No worries. Take your time. That's what this is about. Hey, Jesus, take care of Brenda. I mean, what she's saying, please. And then Claudia said, at an A should be a bullish candlestick formation. You can see it. There's an engulfing bullish right here at the A, Brenda or Claudia. Then at the B is a bearish candlestick formation. Okay. Then at the C, there's a bullish one. And now this market's on its way to hit the D, which then will be a bearish candlestick formation. Okay. Now, Claudia asked a pretty good question, which is what happens if the market forms a bullish candlestick formation at the 5-0? Just like this right here. Well, if there's two lower levels of past resistance to become future support, then there's a 90% probability, Claudia, that this is going to go down into the green zone. What I do is I will draw a counter up trend line. If it bounces at a 5-0, I will draw a counter up trend line. Because usually what happens is if the market's going to continue to retrace and go deeper, it will not break the counter up trend line. But if it breaks the counter up trend line at the 5-0 with a bullish candlestick formation, then the 5-0 might be where it bounces. Sometimes that happens. Okay. Now, in your manual, there's a whole section on your Fibonacci's. There's a whole section on pivot points. There's a whole section on how you should set up your charts. Here's the Fibonacci's and how to trade them. But now I want to talk about time frames. Okay? Time frames. I want everybody to read this. Okay? See, what happens is The larger time frame is just going to have candlestick formations. We've already talked about these zones. These are the zones, okay? So what I want to do is I want to show you, let me see. That it's in your manual about the larger time frames controlling the smaller time frames. I think here it is. Okay, now look. Here is the A, B, C, D on a daily time frame. And what you will have is, here's a daily chart, here is a 2-hour chart. You will have just bullish candles, then bearish candles, then bullish candles on the daily chart. But then on a 2-hour chart, because the larger time frame controls the smaller time frame, and the smaller time frame will be forced to go in the direction of the larger time frame. So what will happen is, as the market's moving from A to B, you can see it right here, which is really C to D, you will see waves. You will see an uptrend. You see the uptrend right here? And then the market will crown. It'll come back down, and you'll see a downtrend where the market's making lower lows and lower highs. Do you see it? And then the market will crown, and then it will create waves. And this is A, B, C, D1, A, B, C, D2, A, B, C, D3, A, B, C, D4, A, B, C, D5. Between a C and a D will be usually anywhere from 4 to 6 A, B, C, Ds. And so here you can see the waves, A, B, C, D, A, B, C, D, A, B, C, D, then the crown, then down A, B, C, D, A, B, C, D. So on a retracement, there's usually 2 to 3 A, B, C, Ds. Then you will see up A, B, C, D, 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 A, B, C, D. Boom. Everybody got that? And of course, it's the same in a downtrend. You will see down A, B, C, Ds. Then you'll see a trend line break, up ABCDs, another trend line break, down ABCDs, just like you see it here. Here's the ABCD daily. Here's the ABCD 2-hour. You can see all the waves inside. You all see it. Tell me you see it. Man, Chief, I see the waves. You've made a believer out of me, Chief. Okay, so now, here's what we're going to do. I want everybody to take a screenshot of this. Okay. Let me see, I'll bring it up a little closer. All right, great. Take a screenshot of this. Okay, now, the red is the daily chart or larger time frame. Now, if you're a scalper, the red might be a 4-hour, and the blue might be a 30-minute. Do you understand that? And so the blue is a smaller time frame. All right, now, I just showed you that when the market, you can't trade the A to B, you can only trade the B to C and the C to D. Very seldom will traders catch the first A, B, C, D, okay? But here's what I need you to see. If you turn on your charts and you see on a daily chart that the market is in either a B to C zone or a C to D zone, then it'll teach you how to trade appropriately. Now, remember we went all through this structure right here. I can't back up. Okay, we went through the up push zone, market hits D, you get a new A, B, C, D, a new game begins, but in your new game, you can't trade the A, B, you can only trade the B to C and the C to D. Well, if you are monitoring on a 4-hour chart, the B back to the 382 on a 4-hour chart may be 90 pips. But on a daily chart, the distance between B and the 382 can be as much as 300 pips, because the larger the time frame, the larger the distance between B's and C's and C's and D's. It's just like on a 4-hour chart, okay? The distance between C to D is usually about 350, sometimes 400 pips from C to D on a 4-hour chart. But the distance between C and D on a daily chart is going to be 600 to 750 pips. Do you all understand that? The larger the time frame, the larger the swings. So then, all we want to do is find out where the market is, because the daily chart is being controlled by the weekly chart. But all we need to do is find out where the ABCD is on a daily chart, and then we will learn how to trade that direction on a 4-hour chart or 2-hour chart. Now, zero in right here. Can you all see my mouse? I'm at the very first C down here. Can you all see my mouse? Now, you see this A, B, C, D? This is a capital A, B, C, D. It's a capital A, B, C, D on a 4-hour chart. And we are literally in an up push zone on a daily chart. But in our A, B, C, Ds, we are going to have a yellow retracement zone. We are going to have a find the C zone, and then an up push zone. Do you see how I have it's you can barely see it, but there's a yellow, a green, and a blue zone. And every single one of these, A, B, C, D, will have a retracement zone, a find the C zone, and an up push zone. Once it hits the D, it will then create a new retracement zone, yellow, green, find the C, and blue push zone. Once it hits the D, it'll be just like a good little Mexican, and it will repeatalo. It will have another yellow zone, a green zone to find the C, and an up push zone. You got it? Everybody got that? And as the market goes down, it will have a down yellow retracement zone, a pink find the C, and a blue down push zone. Once it hits the D on a 4-hour chart, it'll have a yellow retracement zone, a pink find the C zone, and D, C to D, down push zone. Do you all understand that? And as the saying goes, the market goes your way until it takes out the A. See? A, B, C, D. 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 The market's been making higher highs, higher lows in an uptrend. Boom. It took out the A. Everybody got that? Then in a downtrend, it's going to do down ABCDs. A, B, C, D. A, B, C, D. A, B, C, D. Until it takes out the A. The market goes your way until it takes out the A. Once it takes out the A, it's going to crown. And then it's going to go up A, B, C, D. A, B, C, D. A, B, C, D. The market will go your way in an uptrend until it takes out the A. Okay. Now let's talk. I want everybody to type in ABCD, 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 1, 2, 3, 4, 5. So I just want you to type it in. ABCD, ABCD, 1, 2, 3, 4, 5. Okay. Great. Now, the truth of the matter is that's how the market works on all time frames, because every time frame is being controlled by a larger time frame. I don't care what time you look at. You look at a 10-minute chart, it's being controlled by the hour chart. You type in an hour chart, it's being controlled by the 8-hour chart. You look at a 4-hour chart, it's being controlled by the daily chart. Every chart has to go in that direction. So now I had you say ABCD, ABCD. Now remember, there's 4 to 6 ABCDs between C and D, between B and C on a smaller time frame. There's usually about 3 ABCDs, and then there's anywhere from 4 to 6 ABCDs going up to the D. Everybody got that? Orthnell said, Chief, thanks so much for your wonderful help. I have to leave for work now, but your kindness is greatly appreciated. I shall be a successful trader like you. Bye for now. Okay. Orthnell, I'm glad you said I will be a successful trader like you. Yes, you will. And you need to keep on believing that. Now, every trader, look, let's talk about the 1, 2, 3, 4, 5. The 1, 2, 3, 4, 5 is nothing more. And did you all take a screenshot of this? Did you all take a screenshot of this? Okay. Now I'm going to go to a chart, and I want you to see how I'm going to draw this. Okay. I want you to see how I'm going to draw this. I've got an up A, up B, okay, and I've got a B to C and a C to D. Got it? And then I want to follow it up with a down A, B, C, D. Now, do you see the up A, B, C, D? A, B, C, D, right? Do you see the down A, B, C, D? Because you know the market only moves in up ABCDs or down ABCDs, right? So watch what happens when I take the down ABCD and I merge it with an up ABCD. Do you see a crown? Do you see a crown? Okay, now watch. I'm going to move this over, move this over, move this over, move this over. Then I'm going to delete, delete, delete. When and where should a reversal crown appear? Where? You tell me, where are reversal crowns to appear? Because you got to remember, every crown is being forced to move in that direction. Every crown is being forced to appear for a reversal reason. Okay. There is a crown at an A in an uptrend. It would be a bullish crown. It would be a bearish crown at the B. It would be a bullish crown at the C and a bearish crown at the D. In other words, reversal crowns will appear at an A, a B, a C, or a D. Now, if a crown appears between a C and a D, it will be considered a false crown or the starting of consolidation. Now, you've got to remember, candlestick formations on a larger time frame are crowns on a smaller time frame. I'll repeat that again. Candlestick formations on a larger time frame are crowns on a smaller time frame. Golden nugget, put that in your book, in your journal. Now watch. This is how a crown works. You're going to have your trend line, right? And so let's talk now about this market just hit the D from the larger time frame. Okay? This market just hit the D. Okay? Just hit the D, baby. right here. Do you see that? Boy, the market just hit the D. Now look at on the current A, B, C, D. Can you all see where my arrow is? The current A, B, C, D, okay, A, B, C, D, the 4-hour D right here just hit the daily D. Everybody got that? Everybody got it? Okay. So do we want to spread our Fibonacci's from here to here? And do we want to put in a new up A, B, C, D, perhaps A, B, C, and D? Do we want to continue to trade an up A, B, C, D? Tell me why. Why don't we just buy this C right here at the 618, what we've been doing? Why don't we continue to keep on buying it? Because since it hit the capital D on a larger time frame, we're expecting this to U-turn. We're expecting it to do a 1, 2, 3, 4, 5. Let me explain, okay? 1, this is going to make this real simple for you. Remember the down A, B, C, D I drew in red? We're just going to repeat that. Watch this. 1, the market comes down and it breaks the trend line. You see where we were supposed to buy at the 618? We don't want to buy at the 618. 1, the market breaks the trend line. 2, you see this A, B, C, D, and now we have a new A, B, which is the brown. 2, the market takes out the A. When the market takes out the A, everybody, we're no longer making higher highs and higher lows. We just made a lower low. Isn't that the truth? And that's why when we take out a lower low, see, the market goes your way until it takes out the A. No, we're not looking for head and shoulders, Roy. We're not looking for head and shoulders. I used to trade head and shoulders for years and got my butt kicked until I discovered the crown. I'm the one that discovered the crown. Okay, now watch this. A to B. Now that the market, number 1, broke the trend line, 2, took out the up A, I go look for the left tip of the crown, which is number 3, which is really the up B in the latest up A, B, C, D. I go find 3B. After I find 3B, I draw, no, backspace, back. Okay. Now that I go find 3B, I literally draw a line straight across, just like this, okay, straight across. And I change it a different color. I put it in brown. Okay, right here, I'm gonna put it in brown. And I'm gonna make it dotted, okay? So now, isn't this my red? Isn't this my new down AB? Remember I had the up fibs right here? Well, I don't need up fibs anymore because the market just took away my A. So now what I need is I need down fibs to my new down AB. Do you see that? Am I doing it down AB? Now, so watch. 1, the market breaks the trend line. 2, it took out the A, which is right here. That's 2. It took out the A. 3, I go find 3B, okay? And I draw a horizontal line because I now want to foresee my future trade. Because 90% of the time, the left tip will equal the right tip, and then number 5 is the new down trend line. So now you got to remember, Aren't we just trading up ABCDs in the green zone at the 618, 786? And shouldn't we be trading down ABCDs and the red zone in the find the C zone at the 618, 786? And so 80% of the time, to almost 90% of the time, left tip will equal right tip. Left tip will equal right tip. So what the market will do is it will rally literally to the backside a large majority of the time, because in an uptrend, think about it, you're 20, as long as golden nugget, as long as the market is above the outer up trend line, it is bullish. When the market breaks the trend line, see, it goes to 50-50, still could continue bullish, could come down and take out the A. If it breaks a trend line, like right here, should you be anticipating a crown? No. You've got to remember, everybody, crowns are only at A, B, C, Ds. You got it? All right, Olio. Oli, good luck at your doctor's appointment. This is being recorded. Don't worry. Okay? So if the market breaks the trend line in the up push zone and it hasn't hit the D, it is still 80 to 90% bullish. Okay? You got it? It's only when it hits a D that when it breaks the trend line, excuse me, let me move this because I don't want to lose it. It is only when it breaks the trend line at a D that I'm anticipating the market to take out the A. I'm anticipating a reversal crown. I'm anticipating to no longer buy C's. Now I want to sell C's. And so number 4 is my 4C entry equal to the left tip, which is usually at the 618. You see how this retraced back to the 618? And then the market's going to fall. Boom, down to the D. Do you all see the up ABCD and the new down ABCD? Yes or no? And so where's the trend line? Well, number 5, okay, number 5 is the new down trend line. See? I now draw from my A to C. That's my new down trend line. That's number 5. So look how simple this is, guys. I know some of you, a lot of you say, well, Chief, I'm just no good at crowns. Guys, it's so simple. It's 1, market breaks the trend line. 2, takes out the A. 3, I go find the 3B, draw a horizontal line. I now draw my down Fibonacci's. I enter at the 4C equal to, which is at the backside of the trend line, because this up trend line acts as a floor of support as long as the market's up above it. But once the market penetrates it, it's going to act as a ceiling of resistance. Okay? Now, I will help you and let you read this before you go explain it to yourself. Okay, everybody read this. Type in done when you're done. All right. Okay, this is in your book. Does it now make sense? Does the reversal make sense? Okay, it's not that hard. Okay, now let's just do ourselves a favor. There it is with the charts. Okay, 1, the market breaks the trend line. 2, takes out the A. 3, I go find the 3B. The market draw horizontal line. Do my down fibs. Enter the 618. There's your ABCD. 5 is the new down trend line. Okay. Now, what I want you to do is I want you to read this, which is going in the opposite direction. Okay, you done? Are you done comprehending that? Are you done comprehending it? Okay, great. So now let's bring this back to reality. Okay, does this page now make sense? And you all took a screenshot of it. Does it make sense? So we should have a bullish crown here, bearish crown here on smaller time frames, bullish crown here, bearish crown there on smaller time frames. You can see in this uptrend, it went 1, broke the trend line. 2, took out the A. 3, we go find 3B. 4, to find our 4C in our new down A, B, C, D. And 5, we draw the trend line. Can you all see it right there at the top? Okay. So now let's really look at how simple this needs to be. Don't you think we should go through all the charts and just try to look at the daily chart to see if the daily chart is in the yellow zone? Because if it's in the yellow zone, we should be thinking bearish. And if a daily chart is in the green zone, then we should be thinking bullish. And if the daily chart is in an up push zone, then we need to be thinking bullish, right? Is that not correct? And we need to go looking for bearish candlestick formations while we're in the yellow zone, in an up yellow zone, bullish candlestick formations in a down yellow zone. We need to be looking for bullish candlestick formations in a green zone and bullish candlestick formations all the way up till it hits the D. Okay. Everybody got that? Now, I'm going to leave this up here and we're going to take another 10-minute break. Okay. This will give you time to digest this. And then we're going to go look at, for the next hour, we're going to go look at the charts. We're going to find some trades, okay? All right. One more concept before we move into finding trades. Okay. As the market moves, it moves in 3 speeds. I want you to envision coming home from work. The first thing you do is you get on the freeway and you speed. You're going 55, 65, 70 miles an hour. Well, when the market takes off and it creates its ABCDs, many times it'll take off in a very aggressive up ABCD. It's like you coming home on the freeway. Then you get off the ramp and you go through the business district. And that business district is usually about 35 to 45 miles an hour, right? The freeway is called the inner trend line. The business district is called the outer trend line. And then when you get into your neighborhood, you got to go 25 miles an hour. That's your long-term trend line. You all understand that analogy. And so what we're trying to do is we're trying to determine where the market is. Because the sweet spot is that when the market breaks an inner trend line, it has a 90% to go to the outer. And as long as the market is above the outer trend line, the market is in an uptrend. You got it? So let's talk about the ways to get in an up push zone, or the ways to get in a down retracement zone. Okay. Now I'm going to go back over here and I'm going to find a currency that is somewhat trending. Let me see, GBP, GBP Aussie, GBP CAD. Okay. All right, here we go. Okay, now see, here's the trend lines. Here's the Fibonacci's. Here is the trend lines, smart trend lines. Okay. Here's the neighborhood. Here's the business district. And here, not here, here's your freeway. See how the market, man, the market hit the freeway. We're off of work. Then the market breaks the inner trend line. You see this, breaks this inner trend line. And when it breaks the inner trend line, look at how it comes down, A, B, C, D, A, B, C, D. Okay, but it's above the outer up trend line. Agreed? Okay, so let's talk about let's talk about this up push zone right here. This up push zone. Now I'm going to take off the trend setter because I need to make a point. When the market, and here's the ABCD, here's A, here's B, here's the market came back to the 5-0, okay, bounced at the 5-0 and went up to the D. So all this is the up push zone right there. That's the up push zone. Can you all see the up push zone? Okay, here's the up push zone. But this is only on a 4-hour chart, everybody. Okay. Do you see bullish candlestick formations in this up push zone? Do you see it? In the up push zone, can you buy bullish candlestick formations? Yes or no? Okay. Now, did your bullish candlestick formations pay off that you bought? Okay, now watch. In this whole movement here, there really was only one, two, three, and that was right here where the market literally, and let me do this in red, the market formed a bullish candlestick formation. That's a bullish morning star. Decision, indecision, indecision, decision. Okay. 1, it created a bullish candlestick formation. 2, it created a counter trend line that became broken. And 3, the blue, is the stochastic in the buy zone. Do you see it? So that's one way. That's one way you can make money in an up push zone, is to go find bullish candlestick formations. And all you have to do, everybody, is turn them all on right here. Okay. Because see how there's no candlestick formations now? Now watch. If you go turn on all your bearish and all your bullish, see how they appear? So the safest, most productive way in an up push zone is to buy 1, 2, 3s, or in a down push zone, sell 1, 2, 3s. Does that make sense? Number 2, I'm going to show you a way you've never thought before. Okay, never thought before. You see the bearish candlestick formations that exist? Now you probably ask yourself, yeah, why do these bearish candlestick formations appear? Okay. What if when you see a bearish candlestick formation, what if you put an order to buy 10 pips above that bearish candlestick formation? 10 pips above. Because what usually happens when the market takes out a candlestick formation, doesn't the market go the other way? Doesn't the market go the other way? So look at how the market came up and took me in there. Okay. Now I would have got a better deal because see, this one appeared, and then right after that one appeared. So I would rather get in this one because the market hasn't activated that one yet. So when this appeared, man, I bought that 10 pips above the bearish candlestick formation. Right? Now the market went up a little bit, came back down. I always like to keep my stop below the trend line. I'm in the up push zone now, remember. So watch what happens. If I put a pending order right here to buy above this bearish candlestick formation, and I fell asleep, did this trade take me in? And was that productive? It was, wasn't it? Can you all hear me? Because Jesus, help Lonnie. Lonnie says she can't hear me. Okay, good. All right. Now, you know what subswings are, right? Subswings are when you have an A, B, and you have a C, just like this. A, B, C, and D. And you have the market, okay? You have the market starting to retrace. And so as it retraces, it'll do sub A. Now, we're all on the 4-hour chart, okay? 4-hour chart. Or whatever time you want to be on, you're on that chart. And you'll see the market do these little sub ABCDs, just like this: sub A, sub B, sub C, sub A, sub B, sub C. Okay, these are subs on a 4-hour chart. Okay, this may be the daily trading range and the pullback. The next day, daily trading range and pullback. So the next day, daily trading range. The next day, fundamental announcement. And the market just sits there and goes like this. Okay, the next day, just a typical trading day. So the market comes down, comes back up. The next day, it goes up like this and comes back down. The next day goes up like that, comes back down. Okay, these are called subs. Would you agree on that? And so when you're in an up push zone, because this is our up push zone, when we're in this up push zone, a second way, the third way, the first way was to buy bullish candlestick formations. The second way was to sell the highs of bearish candlestick formations. And the third way is to buy sub ABCDs. When you see a sub like this, an AB, go ahead and buy that 618. Put a stop below that sub A. So when the market comes down and takes you in, okay, takes you in and takes you to the D. Now, does that make sense? There are 3 ways to trade in the various zones. One is to buy candlesticks in that direction. If you're in an up push zone, you buy bullish ones. If you're in a down push zone, you buy bearish ones. The second way is to buy the highs of bearish candlestick formations in an uptrend, sell the lows of bullish candlestick formations in a downtrend, or C, buy sub ABCDs. Does that make sense? Okay. So now let's do this. I want everybody to, now we're going to read this checklist. I want everybody to read this checklist right here and type in done when you're done. Why do you think I have an area about anticipated time to be in a trade? Why do you think? How many times have you got into a trade and you thought you could hit your 300 pip goal in about 10 hours? And you just didn't think before you thought. And you say to yourself, I wonder why I didn't hit my 300 pips in 10 hours. Well, heck, you're on a daily trading range that only goes 100 pips a day. So if you're trying to go and grab 300 pip on a currency that has 70 pips in daily trading range, you're probably going to be in that trade for about a week. Does that make sense? And so I want you to kind of think about how long you're going to be in this trade so you don't start to get anxious and you don't start to get frustrated. Agreed? Okay. Everybody read this sheet. And this sheet is all about understanding where your ABCD is on the time frame you're trading and the ABCD on your larger time frame. Type in done when you're done. And you would literally draw circles. I just want you to see, as a matter of fact, this is what we're going to do. Watch. I'm going to take the TD and let me find a currency, backspace, okay. Let me find a currency that's in an uptrend. All right, now here we got a currency that's in an uptrend. Okay, so I'm going to, and I'm going to draw our smart fibs from this low. Okay, so where's the daily? Okay, where's the daily? If we're to look at the daily first, I mean, if we're to look at the daily first, would you draw a circle right here at this D? Or you could say, man, it's at a B, right? A D or a B, because if you do your new AB, then it's right here. Do you all understand that? Now, we need to go find out on a 4-hour time frame where the market is on the 4-hour. We already can see where it's at on the daily. Let's go find out where it's at on the 4-hour. So now we got to draw our Fibonacci's on the 4-hour. From that low, okay. Now on this one, the market is literally gone up to a 127 and bounced. Now, remember we talked about, and I need to show you this. Remember how we talked about how when the market hits the D, this becomes the retracement zone back to the 382, right? Right there. That's the retracement zone. This is a retracement zone. Okay, right there. But this market didn't come back to the 382. So if we would have shorted this evening star right here, okay, or this engulfing bearish candle, we have to sell it right here, and we have to put a stop right above the high. Agreed on the stop? Agreed on the stop? Okay. Now, if the market takes out the 1-2, the high, what I do is I wait for the market to go up to the 127 right here and form a bearish candlestick formation. And I re-enter and place my stop above that high. And as the market starts to fall, now listen to me real good. As the market starts to fall, I will draw a 25-degree angle trend line. 25 degrees. 25 degrees, just like this. And what I will do, because I want you to realize this market needs to fall all the way down to this 382 below a 25-degree trend line, just like this, okay? And if the market breaks the 25-degree trend line, I'm out. I'm out. because the market is all about 25-degree trend lines. Okay, check this out, everybody. Look at market's going up, market's going down, market's going up, market's going down, market's going up, market's going down, market's going up. Okay, you see that? It's just nothing but trend line breaks. So I keep up with my trend lines. Now, here's a golden nugget, everybody. Whenever the market goes up to a 127, 127, usually what happens is, I would have to say a good 80% of the time, the market will in fact come all the way back down to the 3-2. But sometimes this market gets fast and aggressive, doesn't it? And when it breaks that 25-degree trend line, it's going the other way. Now, here's a golden nugget. Whenever I have a bearish, or whenever the market provides me with a bearish candlestick formation at the 127, if the market takes out the high at the 127, it now has a 90% chance to go to the 1.618. In other words, it's no longer coming down into the AB boundary. Whenever the market literally has a closed bullish candle just like that, then I know it's going to the 1.618. So what I will do is I will usually start to take my fibs from the rally, wherever this rally was, just like this, and I'll start to take my fibs and I will start buying 618s. Do you see that 618 right there? Because now that it took this out, I know it's going to wave up to the 1.618. So look at how I buy the 618 here, which is a sub ABCD. And look at how, if this rallies to the 1.618 right up here, boy, it just meets that 1.618 of the capital ABCD. Yes or no? See how it reaches the 1.618 of the capital ABCD? Now, we are officially in the up push zone, and this up push zone, believe it or not, is small because it really is from the 127 high up to the 1.618. That's the up push zone right there, because there isn't much left to grab because we didn't retrace all the way back to the 618 in this. This market is really just really fast and aggressive, isn't it? Okay, so let me see if I can find another. Oh, here we go. There's a good one. We'll start all over again and we'll do the daily chart. And I'll get rid of the trend setter and we'll start with the daily chart. And on our daily chart, we'll go right here and look at how the market's already bounced at the 618, okay? And that was the lowest level of past resistance to become future support. Do you see that? Lowest level of past resistance to become future support, right here. And that's where the market came back. This was your retracement zone, okay? This was your retracement zone, right to there. And I'm going to put that retracement zone. Do you see the retracement zone? This was the find the C zone. There's your engulfing bullish candle right at past resistance to become future support. This is your D, horizontal ray, horizontal line. This is your D right there. This is your find the C, and this is your up push zone, right? Reset. This is the up push zone. Boom. Okay. All right. So if we were to take the checklist and on our larger time frame, would you agree that if I drew a circle right here, I'm in between C and D? Would you agree on that? Because the market's right at the B high. And would you agree that I'm right on this larger time frame? I'm right here at the B high, and I'm in an up push zone. So if I'm right at a B high and I'm in an up push zone, shouldn't I be thinking of figuring out ways to get in on a 4-hour chart? Shouldn't I be thinking of ways to get in bullish on a 4-hour chart? So what I'm going to do is I'm going to start my fibs starting from there. And where are we at, or where is the market in the ABCD here? Where's it at? So if I go back to here, I can draw that it's almost at the 127, a little circle right there, and this one's at the B high right here. Do you see how that works? And they're both in the up push zone. Just like that. Okay, everybody read this. Everybody read this. Okay. So we're in two up push zones, just like this. Okay. We can't be buying this 618 because it's already bounced. And you've read, we've talked about the candles, the trend lines, right? Okay, so it says right here, we got to find our current trend lines. So let's find our current trend lines right here. So I'm going to start at the lowest low right here with my smart trend line at this lowest low. And I am going to draw that trend line, and then I'm going to take my other trend line, smart trend line. I'm going to start from here, and then I'm going to draw that. Then I'm going to start from there. I really don't need that one. I'm going to take that one away, and I'll start from there. And now that one broke this inner trend line. It didn't come to the outer yet, right? Didn't do it. Agreed? Okay, now. So we got our trend lines drawn. We can do it on our daily chart too. It's going to be real clear on the daily chart. Smart trend lines, just like this. And there's the other one, okay? So next, what are we going to do here? Okay. I'm going to have to talk about pivot points next time. But does anybody have problems with your pivot points? Do you know how to find your pivot points? Okay. So then the number 5 says we've got to draw counter trend lines. Everybody read this. Type in done when you're done. Devin, you're getting ahead of the game, but I like how you think. You do it over the wick highs, okay? So now let's draw counter trend lines. Would you agree that that's a counter trend line, 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 and we just broke the counter trend line? Yes or no? Yes. Okay, so we've drawn our counter trend lines, and we can do these both on both time frames. Okay, there was a counter trend line, counter trend line, counter trend line, almost counter trend line. We almost really have another counter trend line break right there, don't we? Okay, now let's keep reading. Did we find past resistance to become future support? Yes, we did. Look at this. See, when we were right here, okay, here's your typical A, B, C, D. Are we at a D? So I want to trade this back to the 382, yes. And then I want to go find in the green zone, which is defined to C, the lowest level of past resistance to become future support, 2 to the left and 2 to the right. That's the only one in the green zone. Would you agree? The only one in the green zone is right there. So now I'm trading this coming down, but I want to be buying my 618. So how's this going so far? Boom, right at the 618, at past resistance, future support. I have an engulfing bullish candle. And now this market has started to do nothing but continue to rally up in the up push zone, yes or no? And so if I take this, okay, now watch what I'm going to do. I'm going to take this and I'm going to link it to my lower time frame right here. Okay, man, this is all my up push zone from right there. Because this chart's being forced to go in the direction of the smaller chart, yes or no? Man, I got to stay bullish all the way up to there. Yes, no? So now we've already figured out past resistance become future support. Now, everybody read this. Type in done when you're done. All right. Okay, and had we done that, how's our trade going? How's our trade going? Just following what the chief showed you here today. Man, you're already up 800 pips. Yes or no? Now, you all know your Fibonacci's. If you don't, read the manual. It's in there. So now let's talk. What were the 3 ways to buy? 1, we could buy sub ABCDs. 2, we could buy bullish candlestick formations. And 3, we could buy the highs of a bearish candlestick formation. Yes or no? So let's take a look right here. Boy. I just want you to see this. If I bought the high of these tweezer tops, boy, that paid off. If I bought the high of this evening star, that paid off right there. And here's the third opportunity to get in right here by buying the high of that. I mean, if I bought the high here, Guys, check this out. Just buying that high, I'm up 522 pips. So now that I'm in this up push zone, if I bought the high, if I bought these bullish candlestick formations after retracing, see, I don't like to buy bullish candlestick formations in an uptrend. I don't like to buy them when they have rallied and made a high right here. I don't like to buy that. But if a bearish one appears, I'll buy that high. Everybody see that? I'll buy that high. Tell me, I'm going to put these blue lines I'm going to do right here. If I bought the highs of these blue lines, how's my trading going on every blue line that I bought? Buy that high, buy that high. See, we just got taken. Well, we were taken in here. Now we're getting ready to be taken in here. Okay. All right. Do you see it? So every single one of my bullish candlestick formations after a retracement are paying off, aren't they? And we're getting ready to literally take out this high, aren't we? Is that not true? So if you really think about it, here's the ABCD, just like I showed you on the daily chart. You can see it, yes or no. And here's the ABCD on the 4-hour chart. So now I want everybody to read this. Type in done when you're done. Now, after everything that is in this checklist and everything I've shown you, it comes down to this one page, doesn't it? Which is on page 175. Yes or no? Didn't it come down to this? And I'm telling you, if you can trade according to this checklist, you will start consistently making money. All right. I have a meeting at 4 o'clock, which I'm late. Did you learn anything today? Are you glad you came to class? Okay. Everything you need to know the foundation of this sheet right here, the foundation of the checklist is all right here from pages 1 all the way here. This is all your foundation. But all this is there to get you to a point of trading in the right direction. Agreed? And this has all been recorded. Now, having said all this, everybody, I hate to leave without praying for all of us, praying for you. And now may the Lord bless you and keep you safe. May the Lord make his face to shine upon you in all your trades. May the Lord open your mind to understand and comprehend everything that is written in this Ultimate Trader's Checklist for the sole purpose of helping you find comfort in the numbers that you pick and peace in all your trades. May the Lord bless you, and you're going out and you're coming in and you're lying down and then you're rising up and you're laboring in your leisure and you're laughter and in your tears until that day you can buckle down and become the disciplined trader, focusing in on 1 or 2 trading strategies, enabling you to become an abundant provider for your family is my prayer for all of you. Amen. Amen, everyone. All right. If you really enjoyed today and you think that the decisions you've been making are the right decisions, make sure you post it somewhere. Make sure you tell somebody else, because there's a lot of people that need help, but they have a tendency to be stubborn and don't seek help. But I think you can see that you certainly can go a lot further when you have a mentor in your life. Amen. 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 All right, everybody. Have a great week. I'll see you next week. And I'll see you in mentorship. For those of you that are in my trading room, I'll see you tomorrow. For those of you, Sunday night will be our night this week. We'll continue with Sunday night this week. And then we will move over to Monday morning the following week, because every other week we're going to do Sunday night, every other week. And Denise, I'll see you tomorrow, and everybody else in Chief's trading room. Okay? And Jesus, go ahead and shut it down when you're ready to shut it down.
Yes, sir, Chief.
And thank you, Jesus, for all you do.
Thank you, Chief.